And we are live. What's going on, guys? It's Ricky with TechBud Solutions. Hope that you guys are all having a good start or a good end to your week. Today is Sunday, May 18th. It's 7:01 p.m. here in Arizona. And markets are dropping, but nothing too crazy, right? So we have the NASDAQ market down about 1% during overnight hours. It hit lows of 1.32%. So we hit lows of like 514. Right now we're trading right around 515. There are a handful of different stocks depending on how overvalued they were. They tend to sell off a little bit more aggressively when negative news comes out. So for those that are a little bit newer and might not know exactly what it is that's going on, very simple. So there was a downgrade that happened. There's different agencies that rate or grade the United States when it comes down to their credit rating, just how we as individuals or as adults, we have our own credit rating. There's like Experian and TransUnion or whatever it is that it's called. There's three main ones, and Moody was the last one that had a perfect AAA credit rating for the US until Friday of last week. They got downgraded, and they downgraded the US to, it's like a AA1, something like that. It's just a downgrade, but pretty much getting rid of its last perfect rating. Some people think it's political. Some people say that it shouldn't matter. It does. I'm not here to make it political. I do not care about that. It's, hey, it got downgraded and there's a reason behind it. So the US as of right now is $36.8 trillion in debt. And one of the reasonings behind this downgrade is that the Trump administration tried to pass the big, beautiful bill. I'm sure you've heard people maybe talk about it, but again, and it got rejected on Friday. But this big, beautiful bill was expected to add $4 to $5 trillion to our deficit over the next decade. So again, why are we adding more to our deficit if we have such a deficit problem? So the whole point behind that was that Moody felt that the trajectory that the US was going and the addition or the desire to add this, big, beautiful bill that would add $4 to $5 trillion in additional deficit wasn't the right direction. So it's an agency. Some people think it's political. It doesn't matter, right? It's its own agency. They decided to downgrade it, and markets are reacting. Do I think that everyone needs to freak out? Of course not, right? Like, even with how markets are trading right now, if we look at the NASDAQ market, it's down 1%. We've seen much worse than that. If you guys remember, and again, this is why I made the video earlier this week. You guys know that I wouldn't mind if the markets pull on back because I want to buy more Nvidia. I want to buy more Apple. I want to buy more QQQ for our long-term portfolio. I bought a decent amount, but I would love to add more. Nonetheless, it's like we've seen it before where there's really negative news, like the GDP report when it came out and it showed that the US contracted for a quarter. And if there's two negative GDP reports, technically we're in a recession. We already have one. But the market sold off a lot more than this, just 1%, right? It sold off, I think, like 2 to almost 3%. By the end of the trading day, the market fully recovered in the green. So I want to make that very clear. You guys know what my stance is. I'm not here to drive panic into the market. Or not into the market. I'm not here to drive panic for the beginners that follow me. I'm sure for those that have, a general understanding of how to invest and how to trade, you understand that this report isn't good. You understand the concerns that this report is highlighting, right? And we take it for what it is, right? This is something that we've talked about over and over again. It's the direction that the US is going. It's our deficit, and it's the uncertainty of inflation in the up and coming months. People like to ignore it because markets have recovered, but the bond market is not recovering, right? And over the weekend, I'm sure some of you guys pay attention to the bond market. It's not as popular as the stock market, but it's also not as easily influenced as the stock market. So bond markets, bond yields are going up, making it more expensive for people like you and I to borrow money, which a lot of these 10-year treasuries, a lot of our mortgages are based off of the 10-year treasury. So when you take out a mortgage and your lender is saying, well, I'm going to shop around for rates, well, what exactly does that mean? A lot of mortgages are based off of the 10-year treasury. And normally they add about 3% in spread. It's not exactly that way, but they add about 3% in spread to whatever the 10-year treasury is. So during 2020, right, when rates were super low, remember when people were getting mortgage rates right around 3 to 4%, bond yields were like at 1% or sub 1%. Right now, bond yields are 4.5%. So the more that goes up, the more expensive it will be for people who take out new mortgages. If you don't believe me, speak to a lender. And if you're thinking about buying a home, it shouldn't scare you either. It's not going to be as much of a seller's market. Who wants to buy a house when interest rates are incredibly high? It just makes the pool of people, it just makes the whole market less attractive. That's all, right? The concern with all of that, you might be like, well, Ricky, what the heck are you talking about bond yields for? The reason that bond yields are so important right now is that the reason the US or Trump is so mad at Jerome Powell and the Federal Reserve in cutting rates, the reason he wants the US or the Federal Reserve to cut rates is not so Americans can get cheaper rates, but it's so the US can get cheaper rates, because the US also needs to refinance its debt that is becoming due. And they don't want to refinance at a higher interest rate. For all of you homeowners out there, let's say that you have a 4 or 5% interest rate. Who wants to refinance at 7 or 8%? Are you guys going to want to do that? It's like, no, right? We don't want to do that. So that's the concern, that the US is running out of time in the need to refinance its debt. That's why the Trump administration wants bond yields to go down, so it can make, I just want you to understand the why, because when you hear us talk about bond yields, you might be like, what the heck? Why do I care? What's the domino effect? I just want you to understand the influence and the why behind it. So I hope that made it a little easier to understand. But yeah, as of right now, markets are down about 1%. I wanted to just take this time and whatever stock you guys want me to break down. I really don't think this Monday, markets have been so eager to recover. I really think it could take one tweet from Trump to send the markets right back up. Markets are that irrational right now, and we all know it, right? So there's no reason to celebrate that markets are down. If markets are down or markets continue to sell off maybe a little bit, I wouldn't be surprised that that sell-off probably wouldn't last. Maybe this can be the tip of the iceberg, but I really don't believe it. Markets have just been too strong and too irrational for too long. So if anything, I think that if markets do sell off a little bit, it could be a good dip buy opportunity for a lot of long-term investors. So let me go ahead and just jump in right into it. I'm going to start breaking down different stocks that are shared in the live chat. All you need to do is drop a thumbs up. Make sure you're subscribed to the channel. And if you are subscribed, then you should be able to share your top stock in that live chat. Let's go ahead and jump right into it. So we got Vassal is asking for Tesla. So do I think that Tesla is a good stock to invest in right now? This is just my opinion, but no. I think Tesla is one of the most overvalued big tech companies in the market right now. It also has a previous resistance range right around 350. So just because I think Tesla is overvalued doesn't mean that Tesla can't continue to go up. Tesla's been overvalued. We all know that fundamentally, Tesla does not belong at $345 per share. Some people might say, oh, it belongs at a lot higher. That's not the case. Maybe when it gets its shit figured out, right? But Tesla's not doing good. Tesla, when it comes down to its PE ratio, to 184 times its earnings, it's previously been much higher than that. But if you look at its overall revenue for the year, Tesla's revenue and growth is down year over year. It is not a growing company anymore. Yet it's one of the Magnificent Seven. It's also If I'm not, unless I lost it. No, it's still at a $1 trillion market cap. I understand Tesla has the robo-taxi coming up. Tesla's been talking about the Optimus robot. I've been a Tesla bull for many years. I have a Tesla Roadster allocation for many years. But again, it's catching up to Elon. Elon continues to make promises that he does not deliver on. Where are these full autonomous vehicles that we talked about over 7 years ago? Waymo has more autonomous vehicles on the road than Tesla does. Why? Where are these Optimus robots, right? Where are the Tesla Roadsters? A handful of things that have been often talked about, but just put on the back burner. And I just think that investors are fed up. So the more overvalued Tesla becomes, if there is a downturn, the quicker it will fall. Just like everything else, right? Tesla was one of the most bullish stocks from the end of 2024, but it was also because of how overvalued it became. It's like a rubber band is the analogy that we like to use for our beginner traders. The further you stretch that rubber band apart, the quicker it snaps and comes right back down. The more overvalued a stock is, once hype is no longer present and once the downturn presents itself, the harder it will fall. That is a known fact about Tesla. Tesla is really good at a few things, but pumping and dumping is definitely one of them. So again, there's nothing wrong with wanting to invest in Tesla if you can stomach it, right? But looking at history and looking at the lows and the highs, you are not getting a deal at $350 per share. That's just common sense, right? If you look at previous highs and you look at previous lows, if you look at the trajectory that Tesla's going, its guidance for 2025, its most recent earnings report, Tesla's not going down the right path. But again, if you want to invest in it or if you want to trade it, right, because it's so bullish, that makes sense. But just make sure that your timeline and intentions align and are realistic, right? So let's go ahead and move on to the next one. What about SMCI's trading overnight? Where's that one at? I'm not a big fan of SMCI. SMCI is one of those companies that, again, pumped up with Nvidia and then has been investigated for fraud, for accounting irregularities. It's been making lower highs and lower lows. If this is a company that you want to invest in, nothing wrong with that, right? You're an adult. You can do whatever it is that you want. I'm not here to convince you otherwise. Some people think that I'm like, oh no, I'm going to get offended if you buy SMCI. Dude, I don't care. I'm focused on my own life, right? And I have my own interest in mind. If you want to invest in SMCI, be my guest. But all I'm here to remind you is look at even fundamentally and technically, this company has not been performing good. So maybe if it figures its stuff out and it begins to change, great. But on the day chart, on the 4-hour time frame, SMCI loves to pump and then loves to dump. Loves to pump and loves to dump. I just don't think it's a safe stock for beginners. That's just my 2 cents. But if you want to trade it, I promise you, be my guest, please do it. HIMS short. I'd be careful with that. So I should have it here on my list anyways. Yeah. So HIMS is approaching previous highs, and trust me, it's not just you that's talking about it. HIMS is a heavily shorted stock right now, and rightfully so, right? If we look at HIMS, it's not as overvalued as PLTR or as overvalued as TEM, but it's overvalued, right? It's a company with a net income of $164 million, so under $200 million, yet it's a company that trades at a market cap of nearly $15 billion. So it's a company that is well ran. It's a company that is growing. So that's the concern with it. It's like, okay, can it grow into what the market is projecting it to be? Because that's what the stock market is, right? It's a leading indicator of what they see coming for this company. So I've looked at their numbers, and fundamentally, it's not a bad company. Is it a $15 billion company? Well, not by any means is it close to that. But again, it's a very hyped up company, and it is growing year over year. It is approaching previous highs. Just because something is overbought doesn't mean that you need to short it. We've talked about that many times for all those that are part of our LPP team. You can get easily burned hoping that something begins to fall when there's incredible signs of this thing just being bullish. So respect it. If you believe that you can make money shorting HIMS, wait for the action to happen. That's what I would do. But if you want to enter early, be my guest, just know that direction is against you. You guys know that I'm all for shorting, but I know that shorting comes at a greater form of risk. I'm not like those crypto bros that are going to be like, yeah, buy here. You should just do it just because I'm doing it. Hell no, right? I don't need our beginners to copy what it is that I'm doing. My risk and my trade is based off of what I see happening. I don't want, nor do I need any of you guys to follow. HIMS right now, I do agree, it is overvalued. I think anyone with any form of common sense that can see this in a very level-headed way, understand that it's overvalued, technically. But it's hyped up, it's very bullish, and it's a momentum play. Let this thing rip up. It's overvalued at 62, but it could run up to 72. So why are you in a rush? So I just hope that the way that you hear me speak and the message that you are seeing me express is that I want you to do things because it makes sense to you, and I want you to do it because it only makes sense to you. It doesn't have to make sense to me and other people, but I want you to always take both sides into consideration, right? Don't just think about, oh, look at how much it could sell off, but you also have to take into consideration how much it could continue to go up. So I think a lot of people can easily see HIMS with, hey, it's overvalued. I probably don't want to buy it here, but it's bullish enough that I don't want to short it. And that's a weird pickle to be in. But remember, it pays to be patient in the stock market, right? So stay patient. Set those alerts. There's nothing wrong with having a watch list, but we all know that big money is made when you're calculated and there's intention behind your trade, not just hope, right? So what are your thoughts on this recovery? We can talk about that towards kind of like the end, but I really don't have, I feel like I share my thoughts every single time. Things weren't getting worse, so they got better. It's kind of like the whole COVID scenario, which was a very, I learned a lot during these bear runs and these bull runs myself, right? And that's one thing that I've come to really find out is when these downturns happen, how eager the market is to recover. I know that's a good thing in the short term, but I don't know if that's a good thing long term, because it seems like we just continue to sweep things under the rug. We just continue to print more money, and I feel like that's kind of like where the market is now heading. We're just looking to print more money, drop rates, and create and facilitate an artificial boom all over again, right? Kind of like what we saw during COVID, and then we get ourselves into more hot water and more of a mess. Like, how long can we continue to sustain that for? I don't know the answer to that. I'm learning more about this just like you guys every single day. Oh gosh. Let's go ahead and break down Google. So the thing that I do want you guys to understand about Google is a stock that I'm invested in. Google, when it sold off to lows of 148, I made a video about it and I shared that I bought some it was at 150 or 155. It wasn't at the lowest price point, so I'm up a decent amount. And I bought this with my investment account, and I bought it with my daughter's investment account and also my lady's investment account. I have no intention of selling the position that I bought because I had no intention of Google recovering this soon. I actually expected and wanted Google to sell off a little bit more. And that's the thing that, again, a lot of people get confused, is when I talk down on the market, it's not that I don't want the market to recover. It's that selfishly, I want it to sell off more so I could buy even more, right? I'm in no rush for markets to recover. I didn't feel like they needed to, but it doesn't matter what I feel. That was just my opinion. Nonetheless, Google is testing a previous high of right around 170 per share. That's on the technical side. But if you look at the fundamental side of what is happening, Google is a very well-ran company. It's a well-oiled machine. But the concern right now with Google fundamentally, and I'm explaining this to you because I do not care that I'm invested. I want you to know of the risk because I want you to do further due diligence to see if it's a stock that you would consider investing in. But the big focus right now and the big concern with Google is that Apple is considering removing Google's search engine as its default. There was talks about that. And if that were to be the case, that's when Google aggressively sold off. And that's why Google took longer to recover. If that were to be the case, 57% of Google's revenue is made up of search engine. And with AI and the AI boom coming around, people think that Google might be losing its edge. In my opinion, if Google wanted to, Google has the cash to be one of the most powerful AI search engines in the world. It's one of the largest companies in the world for a reason. You really think that with $72 billion in cash, Google couldn't develop what it needed to if it saw that to be its priority? On top of that, if I'm not mistaken, Google also pays Apple $20 billion, roughly around that, to be their default search engine. So although they would miss out on some market share, they would also not have that $20 billion in expense, something to take into consideration. Technically, I don't really care too much about technicals right now for Google because it's a long-term play for me. It's a company that I don't see going anywhere. I don't see it disappearing anytime soon. There's even talks about trying to break it up because it's too large of a monopoly. That's how powerful, in my opinion, Google is. So if Google does retrace down to lows of 148, if Google retraces down to lows of 137, I would love to buy more. But what needs to happen? More negative news about it losing its edge through the search engine revenue. More bad news from Apple that it is going to be removing Google. That would cause Google to sell off. But if no more negative news happens for Google itself, it's probably just going to follow the flow of the market, right? The reason Google sold off so much wasn't because Google was a bad company, right? Google exceeded earnings revenue and earnings expectation for EPS, which is earnings per share. Google reported really good earnings, and they reported good guidance for 2025. So, I think that something like Google, something like Nvidia is more of like the interesting tech company right now because Nvidia has to do more with AI, and Wall Street really likes that. So in my opinion, Nvidia is a little bit more reactive to the sell-offs and to the rallies. So it does more. But then it's also more prone to, if more negative news comes out, then it'll overreact on the downside. So all I would encourage you to ask yourself is, what do you want your exposure to be in? Do you want maybe a safer company that does not react as much, but also maybe isn't as relevant and likable like Nvidia? Or are you willing to risk it for the biscuit? And do you like Nvidia? Right? Something to take into consideration. But Nvidia is also one of those companies that when markets sold off, I ended up buying some at 90, at 95, at 98. And I did that with all three of our accounts. And it's a long-term play. So although it's recovered a decent amount, it's recovered a pretty decent amount from 95 to where we're at right now. That's 39%. But think about that. This is the part that baffles me about people, especially those crypto bros. Anytime that I ever talk about this, crypto bros are like, oh, 30, 40%, that's nothing. It's like, all right, dude, we're not trading shit coins, right? This is Nvidia. Nvidia's a $3.3 trillion market cap. It's one of the most valuable companies that's publicly traded. To make 39% in 30 days from one of the most valuable companies that's publicly traded, like that says a lot. It was a very strong recovery. Do you guys remember that when markets sold off, I kept filming videos about how I was preparing to invest long term? That's why. It wasn't that I was certain that markets were going to recover, but I knew that that was the time to talk about it. Just like when markets are overbought, it's not that markets have to sell off right now, but it's that it's always, in my opinion, best to prepare in advance. UNH time. I like that. Let's do it. You guys want to end it with UNH? So UNH, I've heard, well, first off, UNH is a stock that obviously a United Healthcare Group. Some people morally cannot see themselves ever investing or wanting to trade UNH. I get that. Then this one isn't going to be for you, right? UNH is one of the United States' largest healthcare insurance companies. They are right now, and the reason that it's selling off so much is three different things. The first thing is their CEO stepped down for personal reasons. I think that's complete bullshit. Nonetheless, he stepped down. Their previous CEO is replacing him, and he has a huge pay package of like $66 million for 3 years. Very well compensated. The second thing that I want you to know is they suspended their guidance for 2025. That's not a good look for a healthcare company. The third thing that I think is important to note is that they're being criminally investigated for Medicare fraud. So if things do come to light, and if this investigation is prolonged, I don't know how much UNH can sustain that downturn, right? If more negative news comes out in this investigation, then expect more of a downturn. It's this, I think the best way that I could explain it is what happened that we all experienced ourselves during the trade war. During the trade war, as soon as things were not getting worse, then the stock market started to recover. It's not that things got better, it's that things didn't get worse. We saw it during COVID and we saw it during this trade war. So I would assume that the same thing could happen for UNH. If things are not getting worse with its investigation, with their CEO stepping down and with their guidance, then technically it doesn't have any reason to continue to sell off. But if there is further progress in any of those three, then expect a larger downturn. There is a fourth thing that I want to highlight. There's been a lot of internal executive buyers. This has instilled a lot of confidence in investors, because the most recent one, I think it was done on Friday, the new CEO, I believe it's the new CEO, don't quote me on that, feel free to look it up yourself. There was a series of executives like the CFO and a series of other executives that bought like $1 million to a few $100,000 to $5 million. Okay, that's a lot of money for people like you and I. That's not a lot of money to people like them. So nonetheless, it acted as good news, because it's like, hey, things are not getting worse. Executives are buying. Market has probably bottomed for UNH, is what they want you to think. But then the CEO supposedly purchased $25 million worth of UNH during this downturn. Did you guys hear about that? $25 million is a lot of money, right? And you have to think about what it does. It's not even so much about the action, but it's more of like, this is what I'm invested into, what I believe in, because again, now he has skin in the game, reasons to make this company succeed and recover. So when you see a CEO and the series of executives invest into their own company, I think it just instills a lot of hope for this company to recover. And yes, I'm using hope because that's still all it is. So do I think that UNH is the safest stock to invest in right now? Of course not. And if you don't want to invest in it morally, don't. You should never be convinced to buy something if you do not want to. But if you look at UNH, and as long as those three things don't get worse, with the CEO stepping down, with the guidance, and with the big one is the criminal investigation. If you look into the actual fundamentals of this company, have you guys ever looked into it? I made a video yesterday and a lot of you guys liked it. I made a video about it 2 days ago and a lot of you guys liked it. UNH is a badass, well-oiled machine. It is. You might not like the company. You might not like what the company stands for, but it is a money printing machine and it's growing year over year over year. Not just the stock, but the actual company itself. If you look into the fundamentals, UNH, look at the current market cap. Try to find another company that's this valuable. This company has a market cap of $264 billion. So let's just say $250 billion, right? This company generates $410 billion in revenue a year. Now, the big concern is, well, what if it's broken up? What if with this criminal investigation it begins to fall apart? That is a valid concern. But if this is all just politics because of the Luigi Mangione case, and they're just trying to stick it to this big healthcare company and they're trying to break it apart, we can't do anything about that. But it is a company that generates $410 billion a year, yet its market cap is less than that. Isn't that crazy? Its market cap is nearly half of what it generates in revenue. I'm going to show you how ridiculous that is. Its PE ratio is only 12 times its earnings. If you look at a company like PLTR is trading at 535 times their earnings, meaning that you're paying a premium to buy the stock at the current price. Because PLTR, have you guys looked into it? PLTR currently has a larger market cap than UNH, $305 billion. Do you see that? $305 billion with this huge push. $305 billion, yet PLTR is a company that generates a little over $500 million. $500 million. Not even $1 billion. And they're worth $300 billion. Do you see the disconnect? But there's hope. Wall Street likes PLTR. It's AI. Let's be honest. A bunch of PLTR investors don't even know what the hell PLTR actually does. It's just a hyped up stock. But it is a well-run company, and it is growing quarter after quarter and year after year. So it's a hard stock to bet against. Nonetheless, you cannot ignore the fact that there's a big disconnect from what the company actually makes to what the company is currently valued at. $300 billion. Crazy, huh? But again, it should be an interesting week. I think United Healthcare stock is a stock that a lot of us are going to continue to pay attention to. Please, and take this from me, do not trade it, do not invest in it if you are not okay with volatility. It's a very relevant stock, and because of how delicate it might be to news, one moment it might be rocking, right, skyrocketing, another moment it could be falling apart. That's not a stock for beginners. If you want to invest in it and you have the stomach for it, I would encourage you to watch my video from yesterday where I break down even the one share test buy. It kind of like breaks it down. I don't know if it was yesterday's video, but the one two or 3 days before. But PLTR is a meme stock. That's a conversation for another time. But I feel like I've bored you guys enough. I appreciate you guys tuning on in. I'm really excited to see what this week has to offer. Markets are down right now, like we said, but I don't think it's anything to freak out about. Markets are desperate and they're always eager to recover. I really think that it could be one Trump tweet and markets are back into the green. So that's why I don't even want to be like, yay, we're pulling back a little bit. There's no reason to, because first off, markets are not fully open yet. And second, we always know that we're always one tweet away from markets pumping up for no rational reason. So hope to see you for tomorrow's live trading session. There is a discount link, and it is the biggest discount that we offer. So if you've been waiting for a sale, then the link is for you. Second link in the description down below will allow you to join LPP for $1 a day is what it breaks down to. You don't have to join. You can learn how to trade on your own, fully on your own, just on YouTube. But again, if you're someone that learns best by structure, and if you're someone that wants to watch me trade live every single day, then that's why we made LPP. It's just, again, more efficient, more structured, and definitely for a beginner that learns best by watching other people do, then I believe LPP is for you. So I appreciate your time. Hope that earns a thumbs up. Feel free to share any thoughts or comments down below. And like always, let's make sure that we end the year on a green note. Take care, team.